Hello everyone and welcome to today's major markets update for August 17, 2022. I think the anticipated pullback is underway and now the market needs to prove itself if this is a wave 4 pullback or a larger B wave pullback. And of course the bears will say the counter trend rally has ended. But for that to happen, we need to see a lot more downside price action before we can jump on board. So as usual, we'll let the market decide which of those options it will take. It's opinion that tells us it's either this one or this one. But the facts tell us we have not seen a 4 and a 5. We anticipate a 4 and a 5. If it doesn't happen, we've had 3 waves up. Very simple. We know the price levels to watch. Very simple. It is really simple. That's really the difference between these two options. So the trading rules, etc., etc. We'll go over those, of course, in a minute. Let's go straight to the charts. So we finally topped into the next ideal third wave target zone. We had the fifth wave target zone in gray here, meaning wave 5 in gray of green wave 3. So far we've still done only 1, 2, and 3 waves higher. So that's why we have a question mark 4 and a question mark 5. Are we going to see that one, yes or no? The decline of yesterday's high, which was a nice impulse, by the way, of the, I think, August 10 low, 1, 2, 3, 4, 5, another impulse. And this still looks like an A, a B, and a C. I think we'll get downside to around 41.80, 42.25, another rally, and another decline. This should last a couple of days. Note that wave 2, if we're going to get a wave 4, lasted almost 3 weeks. Sorry, 2 weeks. And was a flat, so this should be a fast zigzag. If we're going to move below 4,095-ish, then all we got was 3 waves higher. And then I'm looking for this setup, A, a B, and a C. Why? As I've said before, we've had very strong market graph readings that I would say 8 out of 10 times lead to continuation of the rally. But when you get such strong graph readings, you cannot continue to have such strong graph readings. We need to take a breather, literally. So this is the ABC setup that I'm tracking. The bears, of course, think that all of wave B has already completed, and we're now in wave C already. That will take, in my humble opinion, a drop well below 3,900. So nothing out of the ordinary here at all. I still prefer the impulse higher. That is my preferred path to about 4150, 4100. Below 4090, I think we'll have this B wave option to about 3900. So still exactly the same as I mentioned over the last several days. Simply that we finally got the anticipated pullback, in my humble opinion. Of course, if we go above yesterday's highs, all bets are off. What will happen if we go above yesterday's highs? Here's the Nasdaq 100. In that case, I think we'll go to about 4,200, a revisit of the 200-day simple moving average. But please have a look here. Here is gray wave 4, after I adjusted the wave count based on the wave extension that we got. Because normally this wave C/3 should have topped here at 13,155, and it didn't. Wave extensions must always be anticipated, we cannot be known beforehand. So we anticipate them, and if they happen, we know exactly what's going to happen. That's the beautiful part of Elliott Wave. And look where we topped, pretty much a couple of nickels below the ideal 5-is-1 relationship as exemplified by this arrow. So after 3 comes 4 and after 4 comes 5, assuming we'll get a impulse higher. I do not want to see the Nasdaq 100 go below 12,800. If we do, then I think we'll have a deeper B wave, and then we'll get the C wave. That will then be a B wave. Why? Because then all we got was 3 waves higher, just as I showed you for the S&P500. So please keep those differences in mind. The market is about the probabilities of possibilities. So we have those possibilities. We still have to content ourselves with this larger ending diagonal that took pretty much all of this year to complete. So a counter trend bounce of about a couple of weeks versus pretty much 6 months of a wedge pattern formation is a little bit short from a time symmetry perspective. And everything matters in the markets. Of course, price is the final arbiter. It's always, but of course, time matters, market breadth matters, sentiment matters. All those things matter, and I'll go over those in a little bit. So I expect a pullback here to about 12,800, 13,200. This is the green target zone. So this is your low risk buying opportunity for the next rally to about 42,200 plus or minus 200, because the risk here is at about 12,800, targeting 12,100. Okay, please keep that in mind. So semiconductors, I'm a little bit sorry here that I've been flipping back and forth between the 1, 2, 3, 4, 5 setup and the 1, 2, 3, 4, 5 ABC setup. It always becomes a issue once we start wrapping up these final fourth and fifth waves. It is a interpretation. So this still looks like a flat, in my humble opinion, where we then had wave A, wave B, and wave C. The telltale was, of course, that we did drop a little bit too low for this potential wave 4. But then the rally here started to look impulsive, but it failed. So this looks like a flat, and the target zone for this flat is here given in green. So anywhere between, I would say, 2850 and 2650, with of course strong support at 2750. So that matches all quite nicely. That should be wave 2/B, and then we get wave 3/C. So definitely the semiconductors look more bullish. Now please note the target zone is here huge. All right, anywhere between 3,450 and pretty much almost new all-time highs. Why? Because I don't know if we're going to get the CSA extension or a 161.8% extension. Neither do I know yet where this wave C of 2/B will bottom. To be determined. All of that determines then, of course, where this wave 3/C will happen. But ultimately, I think the general path was correct. Down, up, down. Even in a 4-5 setup, we would have the 4, the 5 would be up, and the next two would be down. So the general path is still correct. Below 2860, we're going to look at 2750. Below 2750, I'm going to go and look here at around 2650. But I don't think we're going to drop that deep. 2750 seems to be very stiff support now. Here's the Dow Jones. The Dow Jones would still look better with a final 5, micro 5. Doesn't have to. It can be snuck into somewhere in this 3-day rally. It would look better, especially considering how overbought the index was yesterday, which is more of a third wave hallmark. And then we should see some more negative divergences develop, but they are already creeping in on the charts here in orange. I'll put them on. I don't have it yet, of course, here on the RSI 5, right? It's not there yet. So that's what I would like to see. We do have it on the MACD here, and we have it here on the money flow. But I would like to see it as well on the RSI 5. That would be final confirmation. Beggars can't be choosers, so it doesn't have to be that way. And we're still above the 200-day moving average. So what it requires now is, of course, a continued break lower, especially below that is Monday's low. That would be a very good indication that this wave 4 is underway. And again, I really don't want to see this go below 32,360. That would be too deep of a wave 4. It's not impossible, but would be a little bit too deep. Then here we have the IWM. The IWM looks still better with a 4, 3, 4, 5 type of setup. Unless I'm missing a little bit something here, then this would be 1, 2, 3, 4, 5. So we can say the alternative count here is, of course, that this is 3. It would align, of course, with the other indexes. And this is 3. And then this will be 4 alternatively. And then this will be, of course, 5. Okay, so it's a little bit of an interpretation on this wave here. Then this will, of course, be 1. And this will be 2. Okay, then this will be, of course, 3. So you can see me at work and see the little bit of an interpretation issue here. What is exactly which one? But it would mean, of course, a drop and then a rally. So that's what we're going to look for. If I would do Fibonacci extensions, how would this alternative count then look? from a Fibonacci perspective. If it matches better, then we'll take, of course, the alternative count. And there we have 2. It looks a little bit short here for this wave 3, but it's okay. It's doable. So we'll keep it on the charts as is. We had, of course, the bullish breakout, and that one has worked like a champ. Right? The bullish breakout, it held the next day. So we're at the breakout, gapped open, retested it intraday here, and then we moved higher. So bullish breakouts always need to be longed with, of course, appropriate stop. So your appropriate stop would, of course, be the previous day low or the low a few days before that. You just don't want to see it close below that. All right. Now let's move on to Tesla. I've had it several times in emails. No one has bugged me about it. Still looking here for this 3, 4, 5, 4, 5 setup. This could become a flat wave 4, by the way. Okay, so this was more like a zigzag wave 2. So this could become a flat wave 4 to be determined. So far it looks like only 1, 2, 3, 4, 3 waves up. If we get a new little uptrend high, then we have 5, and then 5 completes, and then we get the pullback. But wave 4 here can still subdivide into an A, a B, and a C. Now let's look at market breadth. Again, everything is important in the markets. Not one thing can explain everything. It's impossible. All the things combined explain the most, but still not everything. So this is the bullish percent index for the NYSE or the NYA, whatever you want to call it. And this has been in a long-term downtrend ever since October, November last year. And you can see we broke above it. That's a significant development. Any rally that we've seen since the correction started, all of the previous couple of months, were held in check by this downtrend line. Okay, now we're making a higher high. The previous rally, lower high. The previous rally, lower high. Now we're making a higher high. So there's a change in tune going on. And this could still then mean that we are, of course, only in a massive larger bounce. But it means that this leg lower has completed. That's what it tells us. This leg lower has completed. Same with the NYAD, the advanced declining line. You can see we broke first out above this shorter term downtrend line. It was a false breakout. We got one last rally, and that was it. And then, of course, we had this downtrend line, a little thicker, a little more important. We broke above that one as well. And now we broke above the ultimate downtrend line that has held the entire everything in check, so to say. And we broke above that one as well. So also this one shows that we have a trend change in place, that we're now in a different market regime than we have been in all of this year, all of the past 6 to 8 months. Same for the stocks only. AD line broke well above the downtrend line. You can see here this rally was held in check by the downtrend line. This rally was held in check by the downtrend line. The current rally not. So this is again a change in market behavior. It's different. The current rally is different. So that tells me that the decline that we've experienced over the last couple of months is indeed over. It's not the same. So anybody who thinks that we're going to then potentially to new lows again, which suggests this is all still part of the same correction, we might get wrong-footed. How we're doing on the new lows, market will always be the final arbiter. They're still harmless. Nothing really here. They'll probably creep up a little bit at the end of the day. Nothing here that is concerning to me. And then, of course, we're going to look here at the buy all, sell all indicator. I don't have any update, I think, at this time of the day yet. And still, of course, on a buy, but let's see if we can get a down today. I don't have the data yet. It will take a couple hours. But that would be a first indication of a indeed change in trend that fits with the rest of the Elliott wave count as well. So overall, if we're going to summarize things nicely, the pullback is most likely on the way. On Friday, we're still waiting for it. Now we have it. So remember on Friday here in italic, I said hallmark of a bull is upside surprises, downside disappointments. First, I was looking at 41.05, 41.50, surpassed. Then 41.95, 42.25, surpassed. And then on Friday, I was looking for 42.70, 43.45. We got 43.25. That is to anticipate, you monitor, and you adjust accordingly. So the latter target zone has been reached, and we've now reversed nicely. So if we continue below today's low, then I think the next target is 41.80 to 42.25 for wave A of wave 4. That remains my preferred view unless we go below 4,095. Mark that in your books, 4,095. So over the next couple of weeks, you'll see the bears call for the top, that we only had 3 waves higher, and the bulls calling for the wave 4 low. Now, I'm maybe a bull at heart, but that's my preferred view based on the strength of the market internally, all the fast events we have. So I must assign a little higher probability on this wave 4. Why? The waves extensions are bullish, right? We have had extensions of the waves that's bullish. We still don't have the wave 3, 4, 5 sequence. Only an extended 3 so far, which can still be a wave A of a larger B wave. We'll let the market decide which it will be, quite simply. Below 4,095, then we're in wave B of B. And we're below 3,900, I need to readjust the bullish longer term perspective. So from a trading perspective, trying to catch this potential wave 5 rally within the indexes when the indexes reach the ideal wave 4 target zone is, in my humble opinion, a low risk buying opportunity when using appropriate stop losses. Okay, your stop losses depend on your own risk, but it's a low risk. Why you want low risk? Buy low, sell high. There's not no risk. Okay, market breadth is still stronger than it's been ever since the correction started. That suggests more upside. As I said, that this current leg higher is not part of the decline that we've seen into June. So with that, thank you so much for listening. Thank you so much for being a valued premium member. Take care, trade safe. Emails out tomorrow. Next update on Friday. Have a great rest of your day. Bye.